Good morning, everyone. Good morning, Vanshika. Good morning. So, we commence with our revenue standard. We had introduced the topic in the last class. Basically, this is a radical shift in the way in which revenue will henceforth start getting recognized. We saw it with the example of the car that was purchased, and along with the car, you have a warranty that is given over a period of time. And along with that, we are also having certain free services which were given. So, how would you go ahead and do the recognition? Was the first example that we discussed. So we started off by saying that uh, uh, under the AS9 regime, the entire revenue was recognized when you had the transactions when the car was handed over. So that was the initial recognition. We booked it the moment the car was handed over. And then we would make a provision for the warranty as well as the servicing costs. However, when we come to Ind AS 115, this is an obligation-based accounting. So we identify how many obligations are there in the contract. We allocate the transaction price to each of those obligations, generally based on standalone selling prices. And as and when a performance obligation is fulfilled, we start recognizing the revenue from that particular obligation. So in this case, what would happen is the car sale would not be booked at 15 lakhs, but it would be booked at 13.54 lakhs, 13.55 lakhs. The warranty of the 3-year period will be spread over a tenure of 3 years. And the 5 free services would be recognized as and when the vehicle comes to the showroom for a free servicing. So this is how the accounting would happen under Ind AS 115. Obviously, there would be no requirement to recognize a provision for the warranty and servicing because we are recognizing the revenue only at a later stage. So costs can be booked on actual accrual that happens during the period. So this was the fundamental change that we had. Then what we saw was the 5-step model that Ind AS 115 prescribes. The first one being the identification of the contract with the customer, because the term used in the standard, the title of the standard is Ind AS 115, revenue from contracts with customers. So you identify the contract, you identify the performance obligations in the contract, step number 2. Step number 3, determine the transaction price. Step number 4, allocate the transaction price to the performance obligations. And step number 5 is recognize revenue as the entity satisfies the performance obligations. The most important steps are step number 3 and step number 4. The remaining 3 steps are mere formalities. You do step number 3 and 4 correctly, then your standard is automatically taken care of. Okay, so this is the 5-step model that we had. We had started looking at step number 1, that is identifying the contract. So Ind AS goes one step further than legal obligations and says that even customary business practices would come under the purview of the contract, which is not the case that is under the Contract Act. So for example, you sell a car or you sell an AC. You are not required to give a warranty. So your agreement, your invoice does not specify warranty as an obligation. But you have always given a 1-year free warranty to the customers. That has been your business practice. That is why people are coming to you. So now this 1-year free warranty that you are giving, any repair that happens to the AC, any change that needs to be done to the parts, you do it free of cost. Now this activity that you do of giving a warranty, though not specified in the contract, gives rise to what we call a constructive obligation. That means my customers are now expecting that this showroom se hum kharidenge, then we are going to get the warranty. So isi store se kharidenge. Now, as the seller, you have no option than to provide the warranty service, because otherwise it will be detrimental to your business. People are coming to you only because you are giving something more than what is prescribed in the invoice. So therefore, for that reason, it becomes a customary business practice, giving rise to a constructive obligation. And that also becomes a contract in terms of Ind AS 115. Legally, it's not. The customer cannot sue you if you do not give a warranty. But the business requires you to give that warranty, and that is why it is also going to be a part of your contract. Okay. So that is the first step. So when we are assessing the contract, we have to ensure that 5 criteria are met. The first one is approval from parties. The second one is identification of rights of each of the parties should be identifiable. The next one is the payment term should be identifiable. Fourth one is commercial substance, and fifth one is collectibility. The most important steps obviously are commercial substance and collectibility. If there is no commercial substance, then having the contract makes no sense. Okay. Step flowchart of the previous page. So we have discussed these steps in detail, criteria 1, 2, 3. We also saw commercial substance. We gave an example. And we also saw step number 5, that is, it is probable the entity will substantially collect all of the consideration. Then we saw in some cases we have non-refundable consideration that is received. I gave you the example of the Indigo Airlines coming out with a sale in which the consideration is non-refundable. So in this case, when do you recognize the revenue? Do you recognize it immediately? Answer is no. Why? Because, sir, you have a performance obligation. The obligation is to transport the passenger from point A to point B on a specified date. Until that date has passed, you cannot recognize the revenue. But, sir, I got a non-refundable amount still. Since you have not performed your obligation, you cannot recognize the revenue. You cannot recognize the revenue. So what the standard has prescribed is the entity cannot recognize the revenue for the non-refundable consideration until either step 1 criteria are subsequently met or one of the events outlined below has occurred. That is, the entity has no remaining obligations to transfer goods or services, or second one is the contract is terminated and the consideration is non-refundable. So entity has no obligations. That means until the date of flying, you do not recognize. Once that date is gone, passenger has flown, you did your obligation, you can book the revenue. And or secondly, the customer cancels the ticket due to some unforeseen circumstances. So you do not have any obligation to do the refund. That time you can recognize the revenue. So this is what is your identifying the receipt of non-refundable consideration. I gave you certain questions for homework. Illustration 1, illustration 4, we had done question 4 of test your knowledge, which was also a past RTP question. We have done this in class, which was basically related to collectibility. And then we also saw this FAQ related to COVID-19 FAQs issued by the ICAI. Okay. Have you guys done those questions and revised what I told you to revise? Yes. Have you guys done that? Good morning, Tanisha, Pooja, Ashu, Viraj. Good morning. Could you go through that, the first 12-13 pages? Yes. Any doubts, any difficulties? Is the pace fine? Is it too slow? Is it too fast? Okay. Yes. What about the others? Who all are there in this? Okay. All right. Shankar has responded. Vanshika has said, okay. So good. So I hope this FAQ is also clear. On 1st April 19, you met the condition. The collectibility was there because the COVID-19 had not yet set in, so you could recognize the revenue. 1st April 2020, for example, COVID had set in, the financial stability of the customer was in doubt. So from 1st April 2020, any revenue pending to be recognized would not be recognized. And from in respect of the revenue already recognized, probably the receivable would have been impaired. So you will have to do an impairment testing under Ind AS 109 and recognize a provision for bad debts accordingly. So that is your COVID-19 FAQ. I hope you read this contract terms and terminations. Nothing special for me to tell in this. Okay. So now we come to the next part, that is combining the contracts. Okay. All right. No problem. I think it was a very elementary session, Vimal. So the main session will start now. So don't worry. Okay. All right. Please revise. Whoever have not revised, okay, please ensure you revise. See, what happens is, if you revise on the same day, probably the time that you will spend in revising is only 15 to 20 minutes. If you revise the next day, it may take half an hour. The third day may take 40 minutes. Okay. So as we delay the revision, our time for revision starts to increase, and you don't have only financial reporting as a topic, right? You have so many other subjects to revise. Okay. All right. So now coming to step number 1, certain contracts need to be combined. Okay. Sometimes you will have multiple contracts, but it makes more sense to combine those contracts into an individual contract. Why? Because, so one second. Okay. All right. I have been updating the presentation in bits and pieces. So at the end of the session, you will get the final presentation. Okay. An entity should combine two or more contracts and account for them as a single contract in certain circumstances. Why? Because the substance of the individual contracts cannot be understood without considering the entire arrangement. This evaluation takes place at contract inception. So let us take a particular example. Suppose you want to buy a residential flat. Okay. You want to buy a residential flat. Okay. Now, in the residential flat, you will have the first contract for purchase of flat. Okay. Purchase of flat. Let us assume this is rupees 75 lakhs. And the second contract is you want to have certain customized modifications in the flat. And this customized modifications that you are demanding is integral to the construction of the flat itself. Like, for example, you want a particular entrance in a particular manner, not the standard entrance which they give. You want, let us say, an archway to be there. You want certain rooms to have the paint in a particular manner, a particular brand of paint. So these are certain customized modifications that you suggest to the developer, and he is going to charge separately 5 lakhs for this. Now, apparently it feels they are two different contracts, apparently, but it makes more sense for us to understand from the developer's perspective that ultimately what is the developer doing? He is giving a constructed flat with the modifications requested by the customer. So in this case, it makes more sense for us to combine it into a single performance obligation. It makes more sense to combine it into a single contract so that you can assess it better. Otherwise, customized modifications as such will not have an independent standing. Okay, contract is there, no doubt about it. But can you have only modification without purchase of flat? I don't have a flat. I'm not entering into a contract for purchase of flat, but I want only modification. ऐसा हो सकता है क्या? Is it possible? It's not possible. You can modify the flat only when you have purchased it. So that is why it makes more sense to combine these two contracts together. Okay. And when do you have this evaluation done? It takes place at the inception of the contract. Two or more contracts may need to be accounted for as a single contract if they are entered into at or near the same time with the same customer or even with related parties of the customer. So suppose holding and subsidiary are your customers or whatever related parties they are. Okay. So it's not restricting to the same customer. It's also extending to the related parties. And if one of the following conditions exists, what are the conditions? Are they negotiated as a package with single commercial objective? If yes, in this case, if they say that total consideration is 80 lakhs and it's negotiated as such, then you combine the contract. Whether consideration in one contract depends on the price or performance of another contract, if that be the case, you treat it as a single contract. Whether goods or services promised in the contract are a single performance obligation, yes, then you treat it as a single contract. If none of these conditions are satisfied, then you treat them as separate contracts. The important thing to remember is you can combine only if the contracts are entered into at or near the same time. So if you have entered with certain gap in between, unfortunately the time gap is not mentioned in the standard. Okay, so when they say at or near, does it mean on the same day, within a week, within a month? What do you mean by at or near the same time? So that is not clear. So it is a matter of judgment. That the seller is going to take. Okay, so this is the combination of contracts. We have a couple of examples in this regard. So we just go through those examples. A manufacturer of airplanes for the Air Force negotiates a contract to design and manufacture new fighter planes for a Kashmir airbase. Okay, so first contract is supplying of airplanes. And at the same meeting, the manufacturer enters into a separate contract to supply parts for existing planes. So the next one is spare parts. Obviously, this is how you will have the contracts entering into. To supply parts for existing planes at other bases, existing planes. Okay. Would these contracts be combined? What do you guys think? Would these contracts be combined? Okay. Would these contracts, I'll come to your question, Vimal. Okay. Would these contracts be combined? What do you guys think? No. Obviously, no. Sir, they are entered at the same time. Agreed. But what are the contracts? Sir, the first one is supplying aircraft. The second one is supplying spare parts to existing planes at all other air bases. They are entered at the same time, but between both of them, dur ka rishta nahi hai. There is no relationship between both the contracts. They are separate contracts. We cannot combine them. Okay, so would these contracts be combined? Answer is no. You cannot. It makes no sense to combine these contracts because they cannot be negotiated as a single performance obligation, and that is why we keep them separate. Okay. Now we have a question. We have a contract to purchase a flat with a builder, including amenities, including parking and free maintenance for the next 3 years. So will this be a combined contract? See, this is how normally the contracts are negotiated in the case of acquisition of flats. Okay, so now when you are buying a flat in a society or a gated community, you are going to get what we call the flat. You also pay for the parking. You get 1 or 2 parkings in the basement or in the stilt. You also pay for the maintenance for a period of 2 or 3 years until the society is formed and the land is transferred to the society. Thereafter, the society does the collection. So now in all these cases, these are all negotiated and entered into as a single contract. So this is a single contract. It's not multiple contracts combined. It is a single contract, but with multiple performance obligations. The maintenance services that you are providing is not in any way related to the purchase of the flat. They are different. So even if you had to enter a different contract for the purposes of maintenance services, the revenue for the maintenance services has no bearing on the purchase of the flat. So if they are entered into in a single contract, we treat them as separate performance obligations. If they are entered into by way of different contracts, a purchase contract for the flat is different, a maintenance contract is different, there is no need for us to combine both of them because they are different from each other. Okay, so that is how you will understand. It's a very, very judgmental standard. Okay, it's a very judgmental standard. Much of what I say depends on what has been my professional experience in dealing with customers on these aspects, in dealing with companies on these aspects, but there are always different views for similar contracts with different professionals. So it is a very judgmental scenario, and all these judgments need to be identified and documented to form the base on which you have taken a particular stand. Okay. Coming to illustration 5, software company S enters into a contract to license the customer relationship management software to customer B. So it is licensing a CRM software. 3 days later, in a separate contract, S agrees to provide consulting services, okay, to significantly customize the licensed software to function in B's IT environment. B is unable to use the software until the customization services are complete. So therefore, the question is, would the contracts be combined? Would the contracts be combined? What do you think? I have given the software to an entity, and after some days, I go and do the customization. Without the customization, the software cannot be used. So now the question is, should I combine or should I not combine? Yes, the contracts can be combined. The contracts have to be combined. Okay, so Krishna Swati, that's right. Vanshika, that's right. Okay. Sharda or Shada. Okay, that's right. Okay. So now this is correct because both of them are closely interlinked to each other. I buy a software, but I cannot use it. Why will I pay the consideration? I need to get the customization also, right? So therefore, it makes more sense to treat them as a combination of contracts, and the software and customization together is the revenue that will be recognized. You have to combine it. You have to combine it because it's with the same customer, but it could also be with a related party. So don't get mixed up with that. The customer should be the same. Okay. So this is how you are going to interpret it. Okay. So very simple. For example, SAP is installed for a group company and customization is done for the subsidiary. So the billing of the software is done to the parent and customization is done to the subsidiary. Without the customization, the subsidiary cannot make use of the SAP. So therefore, the question is, should I combine the contract involving installation of SAP charges for the parent and customization for the subsidiary? Should I combine both of them? Answer is yes, because without customization as per the entity's operations, SAP cannot be utilized, and both of them are related parties. So therefore, it makes more sense to combine both of them. It makes more sense to combine both of them. Okay, so that is how you are going to interpret it. Okay. Next one. Manufacturer M enters into a contract to manufacture and sell a cyber security system to a government related entity P. 1 week later, in a separate contract, M enters to sell the same system to a government related entity Q. Both are controlled by the same government. During negotiations, M agrees to sell the systems at a deep discount if both P and Q purchase the security system. Should the contracts be combined or should they be separately accounted? Or should they be separately accounted? Okay. All right. Now, M enters into a contract to sell a cyber security to P, and 1 week later, it also wants to sell it to Q. Because it is selling to both of them, the agreement is we are going to give a deep discount. We are going to give a deep discount. Now, the question is, should I treat them as separate contracts? What is the basis if I treat them as separate contracts? Or should I treat them as a single contract? Should I treat them as a single contract? So now the question is, you can combine the contracts if A, it is entered into with the same customer, or it is entered into between related parties. Are P and Q related to each other? Answer is yes. You have not studied Ind AS 24 yet, but because the controlling entity is the same government, P and Q are related to each other. So one of the conditions is the contract has to be entered into with the same customer or with related parties also. So here it's being entered into with related parties. So that is acceptable. First one. Second one, are you negotiating both of them as a single commercial package? Are the contracts negotiated as a package with a single commercial objective? Answer is yes. See, for one entity, if he gives, he is giving a particular price, say X. But if he is entering into a contract for both P and Q, he is giving a deep discount on that. That means for the manufacturer M, when he's selling the contract, when he's selling the product to both P and Q, in the back of M's, M's business objective, both of them are negotiated as a single commercial objective, and therefore he is able to give a deep discount. He is able to give a deep discount, and that is why both of them are met, and therefore it makes sense to combine these contracts. It makes sense to combine these contracts. We cannot take it as separate, because look at the words. M agrees to sell if both P and Q buys it, agrees to sell it at a deep discount, agrees to sell it at a deep discount, and therefore it makes more sense to combine these contracts. As I said, it is like installation of SAP. Okay, it is like installation of SAP. So once you install the SAP, thereafter, once you set up the configuration, create a data center, a data warehouse, and then you have a data backup, and based on that, you install the servers. Once all this job is done, say for entity P, then it is only a matter of installing the front-end interface across all the locations. Now, whether it is P or whether it is Q, both of them will connect to the same server which is installed. It's not like you will install SAP for P separately, SAP for Q separately. It's one single contract where you install SAP one time, and then you install the front-end interfaces for P and Q. That is why he can give a deep discount towards SAP installation and commissioning services for P and Q, and that is why it makes sense to negotiate it as a contract with a single commercial objective, and that is why we are doing the combination. So Pooja is right, Yadu is right. Okay, so I hope everybody understood. Vimal, I hope you understood. Yes. Okay. Anybody has any doubts in illustration 6? Because I got some answers saying that they should not be combined. Do not go by the definition of contract entered into with different people, P and Q. Yes, they are. They are different, but they are related parties. And that is why, from the seller's perspective, it makes more sense. To combine. Okay, it makes more sense to combine. Okay, anybody, any doubts in illustration 6? Tanisha, no sir. So I hope this no sir means you have no doubts. Okay, others all clear? Understood? Krishnaswati understood. Pooja, did you follow? Vimal, did you follow? Okay, Manan, did you follow? Okay, clear. Ashu, I hope it's clear. Okay. All right. Now we come to the next part, that is contract modifications. Okay, very, very important. This is one of the most important topics which I'm going to do today. The other one, if time permits, you guys permit, and be receptive, responsive as you always are, we should be able to do both the things today. Okay. So this is a very crucial discussion in step number 1, that is contract modifications. That is contract modification. Payment terms will never decide combination of contracts. Okay. Let's be very clear about that. From P, I may get the payment once the SAP is commissioned. From Q, I may get the payment once, say, 3 months down the line. So it depends on how you are negotiating the payment with each other. But look at the commercial objective. The commercial objective is setting up an installation, commissioning, and providing the customization of SAP for P and Q together. So look at the commercial objective with which you are entering into the contract. Payment can be different for different entities, but the objective is a single commercial contract, and therefore you treat them as a combination. Okay, don't worry about payment terms. Payment, transfer of risk, we have difficulty. I'll tell you why we have this difficulty. First one is, we are not used to the fact that contracts can be combined. When I say contract to P and contract to Q, the immediate thing which runs in our mind is, sir, P ke liye we give a different invoice. We give a different invoice to Q. It will have separate GST numbers of both of them. Then how can I combine it in revenue recognition? That is the first point which we all of us make mistake. The second one is, sir, how do we go by performance obligations? So what happens is, when you're doing Ind AS 115, it's not just learning new things, it is unlearning what you already have learned. And we are coming with a baggage of income tax, we are coming with a baggage of GST, we are coming with a baggage of the Contract Act itself, we are coming with lot of past baggages which are there. So for Ind AS, any Ind AS for that matter, tomorrow you will study Ind AS 109, where there are concepts which you probably may not have heard of before. You come across Ind AS 116 on leases, it takes you to a whole new world after all. So all these cases do not only require you to learn the concepts, they require you to unlearn what you have already learned. Okay. So that is something you have to be very mindful of. Okay. So unlearn and learn and relearn, that is what is the way ahead. Okay. So coming to contract modifications, very, very important. So contract modifications could exist if these 3 conditions are met, and they are very simple conditions that even you and I will agree. There is a change in the scope, price, or both in the contract. Okay, so first thing is, there is a change in scope, price, or both. Scope means the goods supplied, the quantity increases, the quality changes, whatever it is. Okay. Price means obviously the rate changes there, or both undergo a change. That change should be approved by both the entity and the customer. Well, this approval could be written, oral, implied by customary business practice. Sir, जब contract ही था customary business practice के साथ, modification also will go ahead with customary business practice. And finally, the change is enforceable. So this is a very simple common sense discussion. The contract modification could be a change in the scope, price, or both. It should be approved by both the parties and the change is enforceable. But now the question that arises is, how do we do the accounting? How do we do the accounting? Okay. For this purpose, I will be taking you to step number 2 to discuss a very important concept, known as distinct goods or services. Okay. We will discuss this in step number 2. The discussion and understanding of distinct goods or services is very important for contract modification. So I take you through this, then we go back to contract modification. As I do distinct goods and services, automatically step number 2, 50% of the discussion concludes with this understanding. Okay. So when I talk about distinct goods or services, What do we mean by that? Understand this very carefully. It's slightly tricky, not very difficult to understand, but if you do not understand this right now, you will have a problem in each and every question related to revenue recognition in exams also and practically also. So now coming to distinct goods or services or distinct performance obligations. What do you mean by distinct? So distinct could mean different. Answer is no. Distinct will not mean different. Okay, when I say distinct, the contract gives us two identification methods. Okay, the first one is the customer should get benefits from each such goods or services. That is from the satisfaction of each performance obligation. That is from the satisfaction of each performance obligation. Let me take you through an example. Okay, suppose you are a hotel. Let us suppose you are Taj. Okay, you are Taj Hotel. Okay, and you are in the food and beverage business. You are in the food and beverage business. So Taj will have contracts with vegetable vendors and fruit suppliers and grocery suppliers because it has to cater to the food culinary requirements of its customers. So therefore, it enters into a long-term contract. See, you will not have Taj people to go to the market and buy vegetables the way you and I do. They will enter into contract with the suppliers to supply, deliver the vegetables, the fruits, the grocery provisions, etc. directly to each of their resorts. So let us assume that they are entering into a contract with one of the vendors and the vendor is supplying vegetables. Let us assume he is supplying green peas to Taj. I'm making it a very simple example so you can understand. Okay. He is supplying green peas to Taj. At the same time, he is also supplying fruits. So let us assume he also supplies oranges to Taj. Okay. So now, are both of these different goods? Answer is yes. Are both of them distinct goods? Answer is yes. Distinct matlab by green peas is green peas, oranges are oranges. So they are different, they are distinct. And will Taj get a benefit from both of them? Answer is yes. Green peas, the benefit will go because it's used in the cooking. So green peas is chargeable separately for Taj. And oranges will be part of the fruit salad and all those kind of preparations, a juice or something like that. So therefore, that is also in a manner benefiting the customer. Taj is the customer, the vendor is your vegetable supplier. We have to think from the perspective of the vegetable supplier. Now, when I supply green peas to Taj, when I supply oranges to Taj, supply of both of them, is it giving benefit to the customer? Answer is yes. Answer is yes. And therefore, is this condition met? Answer is yes. Is this condition met? Answer is yes. I am supplying goods, green peas. Taj is getting benefit from that. I am supplying oranges. Taj is getting benefit from that. Customer should get the benefits from each such goods or services. That is from the satisfaction of each performance obligation. I have a performance obligation to supply green peas. I have a performance obligation to supply oranges. Both of them are benefiting Taj. Both of them are benefiting Taj. Is this clear? Is this aspect clear? Yes. Everyone, is this aspect clear? Yes. Because now I am going to modify this example. So first you tell me, is this clear? Everyone? Yes. Okay. Now I will modify this. Now I will modify this. Okay. Now Taj has entered into a contract with you pick up any of these stores. Okay. grocery stores. Okay. So the grocery stores are entering into a contract with Taj. So Taj of a particular location requires 100 kg basmati rice for preparing the dishes for its customers. And it is also entering into a contract to supply 20 kgs of Sona Masuri rice. Sona Masuri rice. Okay, Sona Masuri is the normal rice which is not served to customers, which is what you and I normally consume on a regular basis. Okay, we cannot have basmati rice on a day-to-day basis. Okay, so Sona Masuri rice is the normal rice which is given to employees. Okay, the employees of Taj come to the hotel. So staff food is separate, customer food is separate. That I hope everybody knows. So for the employees, Sona Masuri rice is given, and then for the customers, basmati rice is given. Now the question is, from the perspective of the supplier, is Taj benefiting from both of them? And when I say benefit, do not think from the narrow perspective of will Taj be able to sell this in a dish required by the customer and make money out of it? No. When I say benefit could be multiple. So now 100 kg basmati rice is going to fetch direct revenue to Taj. 20 kg Sona Masuri rice is also going to fetch revenue, but in what form? It will give the food to employees. Employees will obviously feel motivated to come. They will not have to worry about food. So therefore, employees can come directly, work for long hours, be rest assured about their meal requirements. So therefore, these employees can service the customers and result in revenue. So is 100 kg of basmati rice and 20 kg of Sona Masuri rice giving rise to benefits for the hotel? Are these two categories of goods giving rise to benefits for Taj? Yes or no? Yes. Yes, they are getting benefit from both of them. So this is different goods and services. Different goods and services. That means different obligations, distinct obligations. Okay, distinct obligation. All right. Now let us move one step further. On day one, Taj estimates that it requires 100 kgs of basmati rice for the coming week. On day one, Taj estimates that it requires 100 kgs of basmati rice for the coming week. What happens on day two is they suddenly some 150 guests come for a birthday party of one of the customers of Taj. So at the birthday party, there was a huge consumption of basmati rice. So now Taj is going to think that I budgeted 100 kgs of rice at the start of the week. But this was a surprise party that came into existence on the second day. Now, if I don't order more goods, then I will not be able to meet my budgetary requirements for the coming week. And therefore, I need another 20 kgs of basmati rice. And therefore, I will place an order with the vendor again. Now, you tell me, is the same, see, the brand is the same. Everything is the same. Everything is the same. Now the question is, in layman terms, what you and I understand, the 100 kg of basmati rice and the 20 kg of basmati rice, which is again ordered as a replenishment because of the surprise event that happened on the second day. So to meet that shortage, additional 20 kgs is ordered. In layman terms, are they different goods or are they same goods? Are they same goods? Forget 115. Suppose you are a guest. You look at 100 kg basmati rice, first lot. You look at 20 kg basmati rice, second lot. Are they different or same? Sir, they are same. कोई फर्क नहीं है. They are absolutely the same. But is Taj benefiting from the 100 kg also and the 20 kg also? Answer is yes. Answer is yes. Okay. So therefore, are these goods different? Answer is no. But are these goods distinct? And answer to that is yes. Answer to that is yes. They are distinct because Taj is benefiting separately from 100 kg and Taj is also benefiting separately from 20 kg. Sir, but the goods are same. हम different की बात कहाँ कर रहे हैं? We are talking about distinct. They are distinct from each other in the context of the contract. They are distinct from each other in the context of the contract. They are same goods, but they pertain to different orders. So they are distinct in the context of the contract, and the customer is going to benefit from both of them. The customer is going to benefit from both of them. And therefore, these goods are now ending up becoming distinct. So this is the first understanding that you have to take away from here, that customer should be benefited from each such goods and services. So we started off with what? We started off with totally different items. We started with green peas. We started with oranges. Then we came to same category but different class of goods like basmati rice and sona masuri rice. And finally, we came to the same category of goods. The goods are the same, but orders are different. The goods are distinct in the context of the contract. So the first thing that you have to see is whether the customer gets benefit from each such goods or services. If yes, then we look at the next case. So in most of the cases, this is generally met. उसका कोई doubt नहीं है. Sir, why doubt nahi hai? Because why will a customer order unless he feels he will get benefit from that? Yes or no? Arey bhai, a customer will place order for additional goods and or services only if the customer is going to get benefit from that. And therefore, in most of the cases, this condition is met. You don't have to really check this condition. You don't have to really check this condition. Okay, it's generally met. So are you clear when I say distinct का मतलब क्या है? It's distinct in the context of the contract. It's not different goods and services. Different की बात ही नहीं हो रही है. It's distinct goods, distinct services. Now, what are the next condition that you have to look at? What are the next set of conditions that you have to look at? Distinct means such goods or services must be separately identifiable. Must be separately identifiable. That means what? That means all the following conditions must be fulfilled. The goods or services should not be part of a single integration activity. It should not be customization or modification of an existing contract. It should not be highly interrelated. Okay. हो गया? Now the question is, sir, explain these three conditions with examples. Then we can understand better. Then we can understand better. Okay. So now let us assume that I am discussing this. Okay, I am discussing this. Let us assume you are L&T. Okay, Larsen and Toubro. The government has given L&T this is L&T Infra. Okay, so the government has given L&T Infra to build roads, let us say in Ladakh. Okay, to build roads in Ladakh on priority basis. Okay, to build roads in Ladakh on priority basis. Now, if L&T has to build roads, आपको क्या लगता है? आप वहां पे चले गए, you put tar, and then you put stones, you put tar, you run the road roller, and it's done. Do you think it is that simple? It is not that simple. Okay. What L&T infra will do is, it will require procurement. It has to procure stones. It has to procure capital goods. It has to procure equipment. It has to procure concrete. It has to procure those rollers in which the concrete is going to get mixed. It has to procure specialized equipment to move the goods from ground location to Ladakh. So you have a whole lot of procurement activity that happens. Okay. So the first thing that L&T is going to do is, it will provide procurement services. It will provide procurement services. Okay. Next, after procurement, the next step that it is going to undertake, is engineering. Acha. Ladakh is not like what we see somewhere in cities like Hyderabad or Bangalore or Bombay or Delhi, whatever it is. Ladakh is a place which is situated at an altitude. It's not easy to construct roads there. Okay. So because of the hilly terrain, because of the mountainous regions, because of the possible scenarios of whatever be the natural scenarios there. I'm not a person who is an expert in those aspects, but because of the different geographical conditions, you need to identify, how do I build this road? Is it better to make a tunnel through a rock? Is it better to, partly demolish a mountain and construct a road? What will be the environmental impact? If I cut a part of the mountain, will it become weak and give rise to landslides? All these things will have to be decided by the engineering department. All these things will be decided by high quality engineers who are employed by Larsen and Toubro Infra. Okay, L&T Infra. So these engineers will build multiple models on their computers to identify how the road should actually move, how it should be constructed, what should be the activity that needs to be carried out prior to laying down the roads, what mountain should be cut, where should tunnels be built, how should these roads integrate with the national highways. All these are matters of civil engineering that will be undertaken, civil and mechanical engineering. Okay, so these engineers will come to that. Now, procurement gave us the goods. Engineering gave us the ideas. Now, somebody has to use the goods and the ideas from the engineering team to construct the road. भाई सिर्फ idea और good से तो नहीं होगा ना. Somebody has to come on the ground and do the construction activity. So the next step is construction. This is the actual physical activity that is being done. And at each phase of construction, the engineering team will inspect it. The engineering team will suggest changes, if any, because one is sitting in a table and sitting in a far away place on a computer and giving ideas is different, and actually going on the ground and working is different. So therefore, the engineers will inspect each phase of work that is being done. Whenever the construction engineers face a problem, for example, they thought they could dig a particular place, but they found it is too rocky, which was not what the engineers had thought about. So now the question is, how do we construct a particular road? Okay, so these are all the things that the engineers will evaluate on a phase-wise basis. And depending on the utilization of materials by the construction, the procurement team is also probably going to place orders accordingly. It will never happen that procurement team places the orders for all the materials at one time. No, it will place the orders in batches, in months, over a period of time, depending on how the construction team raises requests for material. Okay, so in effect, L&T gives procurement services, L&T gives engineering services, L&T gives construction services. Now, my question to you is, what is L&T actually performing as a supplier to the government? Is it giving procurement, engineering and construction services, what we call as EPC contracts, or is it giving a single item of infrastructure, that is a road in Ladakh? How do you think this contract will be envisaged? Is it going to be envisaged as, is it going to be thought about as three different contracts of engineering, construction and procurement, or is it going to be thought about as a single performance obligation involving construction of roads? What do you think is what is your take on this? What is your take on this? It is a single road construction contract. It is a single road construction contract. इसके अलावा कुछ नहीं है. It's nothing beyond this. Okay. Yes. Is engineering services different from procurement? Answer is yes. Is construction different from engineering? Answer is yes. Is procurement different from construction? Answer is yes. They are all different. They are all distinct. The people procuring are not the people who are engineers, and they are definitely not the people who are going to do the construction activity. They are totally different. So they are different services performed by different people. They are distinct services from each other, but in the context of the contract, they are one single service that is being done, because all of them are part of a single integration activity. All of them are part of a single integration activity. And therefore, will these services be distinct in the context of the contract? Answer is no. These will not be distinct in the context of the contract. Okay. Even maintenance. Okay. Even maintenance for some tenure is going to be separate, but they will not be distinct in the context of the contract. Is it okay? Yes. Have you understood the first condition? Have you understood the first condition? Goods or services should not be part of a single integration activity. I will come to build, operate and maintain, that is construction of toll roads, separately, because they come under service concession agreements, for which we have a separate appendix to Ind AS 115. That appendix to Ind AS 115 will be the last topic discussion. Okay. So service concession agreements, we will discuss that on the last step. Okay. So now, goods services should not be part of a single integration activity. First one. Second one, should not be customization or modification. Should not be customization or modification. Suppose we are all connected through devices. You are watching it on a laptop or iPad or mobile phone, whatever it is. Okay. So you and I are connected through devices. It may be iOS, it may be Android, it may be Windows, whatever it is. Each of these software get regular updates. Each of these software get regular updates. Yes. In fact, that is how the contracts are. You buy a phone, updates for the next 2 years, updates for the next 3 years, updates for the next 5 years. Update will flow to you. You will get new updates as well as you will get security updates. Now, are those updates different from the software that you have procured? Are those updates different from the softwares that you have procured? Tell me. Suppose you have a Windows laptop. Okay. Suppose you have a Windows laptop, or let me take you even one step behind. Suppose you take a laptop which has Ubuntu or Linux. Okay. Which has Ubuntu or Linux. on the Ubuntu, you install Windows. Because why you took Ubuntu is because the laptops were cheaper. You wanted it for your office. So you purchased laptops which did not have Windows pre-installed. Then what you did is you bought bulk licenses from Microsoft. You have an office of about 25-30 laptops of about 25-30 users. So therefore you purchased 25-30 Linux or Ubuntu based laptops, and you purchased separate Microsoft licenses. And you called your IT fellow. That IT fellow, what did he do is, this IT fellow came and on each of the 30 desktops, he installed the Windows bulk licenses which you had received, Okay. Now, as part of the bulk licensing arrangement with Microsoft, you are going to get updates for the next 6 years. So you are going to get updates for the next 6 years. Okay. That means you see this Windows runs into so many updates. Sometimes it really gets frustrating. Okay. Something important is going on and the Windows is updating karke we get a message. Okay. So now these updates are for the next 6 years. Now my question to you is, are these updates different from Windows? Are these updates different from the Windows software that was procured? Are these updates different from the Windows software that you have procured? Bolo. Are these updates different from the Windows software that you have procured? Come on. Think and answer. Don't immediately jump. These updates, are they different? You are using a phone which has Android 13. You are going to get an update to Android 14. Is this update different from the Android 13 which you have installed? Answer is yes, because you are getting a new Android version that is installed. So the updates, though relate to Android, it gives a different version of the software. Are you able to follow? Yes, you get a security patch. That security patch enhances the security of your software. You get an update that changes the interface for you. So these updates are different from the Windows software in the sense that they are either improving it, they are either maintaining it, they are enhancing the security of that software. iOS 15 users get iOS 16. It's a fresh new update altogether from iOS 15. iOS 16 gets iOS 17. It's a fresh new update altogether. So these updates are different from the initial software that was installed. But my question is, are these updates distinct in the context of the contract? And the answer to that, as all of you have said rightly, is no. They are not. So many of you said no when I was asking different is perhaps because you were thinking that they are not distinct in the context of the contract, while one of you said that they are different. So I will take it in a way that your understanding is probably correct. Those of you who said no are probably saying that the updates are not distinct from the software. The updates are very much a part of the software. And those of you who said it is different, I will say that you thought it is different because it is adding certain security, enhancing your software, upgrading the software. That is why you said it is different. Both the arguments are valid. Anything apart from this, if you thought, that is incorrect. Okay. So now those of you who said it is not distinct, because all that these updates are doing is it is enhancing your capabilities. It is enhancing your capabilities. It is a part of the same contract, though it is a different offering. It is a different offering. You got a particular software initially. Now the additional offerings are getting attached to that. The additional offerings are getting attached to that. So offerings are different, but they all come under the umbrella of software acquisition. They all come under the umbrella of software acquisition. So these updates, though they are different as such, because it is a separate offering, these updates cannot be distinct in the context of the contract. Cannot be distinct in the context of the contract. Okay. Vimal, again I'm telling you, we are not charged for the updates is not the basis for discussing the distinctness. Okay. The very first example we started off, free warranty for purchase of a car. Did it change the revenue recognition? If I go by the fact that we are not charged for the free warranty, then I should not have booked the warranty revenue separately. The free warranty is a different performance obligation from that of the provision of the car, the supply of the car. That is why we segregated the revenue and recognized the revenue separately. Merely because updates are not charged does not make it a single performance obligation. The fact is the updates are only customizing or modifying the existing software which we have purchased. Payment is never my criteria for revenue recognition. Payment is only one place you will see payment. That is the customer able to pay you? That is the assessment of the contract in step number 1. That is the only place where payment plays a role. Otherwise, in the entire 5-step model, anywhere you will never see the term payment. So merely because they do not charge us for updates, that cannot be the ground for saying performance obligations are the same. No, the updates are only customizing or modifying the software that you have procured, and that is why though the updates are distinct, they are not distinct in the context of the contract. They are not distinct in the context of the contract, because though the obligations are identifiable, can you identify the objectives? Yes. Can you identify, the obligations? Answer is yes. When an update comes to you, is it separately identifiable by you? Yes. You get a notification. Your phone is due for update. Your Microsoft Windows updates are downloaded and ready to install. Kindly restart your computer. All these are indications that the updates are separate from the software. But what are these updates doing? These updates are only customizing or modifying the software and not doing anything else. And therefore, these updates are not distinct in the context of the contract. These updates are not distinct in the context of the contract. Are we clear about this? Everyone, remove the payment. Payment is not my criteria. Hata do usko. Are you giving something extra to the customer? Here answer is no, you are not. You are only modifying or customizing the existing software. That's it. That's it. Nothing else. Okay. Have you understood? Is it crystal clear what I mean by customization or modification? Yes. Vimal Beta, have you understood? Yes. Munish Kumar Gupta, that's right. Okay. Has everybody understood customization or modification? Some of you said no, some of you said yes. Because of lack of communication, I am not able to understand whether you have understood. So My question is it clear? Vimal got it? Yes. Tanisha got it. Ravish got it. Pooja got it. Vanshika got it. Yes. Understood? Samjha? So, two things we have done. One is it should not be part of a single integration activity. Understood? Second is it should not be a mere customization or modification. Third one is goods or services should not be highly interrelated. Goods or services should not be highly interrelated. Okay. So let us look at this. Let us look at this. Suppose you are traveling on Indigo flight. Okay. You are traveling on Indigo flight or Indigo, let us take Vistara. Okay. You are traveling on Vistara flight. Let us say from Delhi to Ahmedabad. You are traveling from Delhi to Ahmedabad. Okay. Now, are you okay, you are traveling with baggage. You are traveling with baggage, obviously. Okay. Now, Vistara is transporting you from Delhi to Ahmedabad. Vistara is also transporting your bag from Delhi to Ahmedabad. Yes, दो चीजें हो रही है. Transporting passengers from Delhi to Ahmedabad and baggage handling services. You go to the airport check-in counter, you place your luggage in front of that check-in counter, they weigh the luggage, वो 15 किलो के अंदर है, then they put it in the conveyor belt, वो जाता है अंदर, and then you get this luggage ultimately at the conveyor belt in Ahmedabad. So Vistara is providing two services. One is baggage handling and the other is transporting the physical you from Delhi to Ahmedabad. Yes. Now, my question is, are these services highly interrelated or separate? Are these services highly interrelated or separate? Yes. Are these services highly interrelated or separate? बोलो. Highly interrelated. They are different services. भाई मानना पड़ेगा. आप you sit in the cabin on a seat, whereas your luggage goes in the storage area and it goes there. So the services are distinct. Otherwise, if they had to be the same, either all the passengers would be seated with their luggage in the storage area, or all the baggages would come and sit on the chairs, which is not the case. So the services are different. The way the customer and the bags are treated is absolutely different. That is automated, whereas here you go manually, undertake a security check, then that lady calls you for boarding, then you board, you sit, you arrive. So the services are different, but the interrelation is absolutely high. You cannot imagine for even a second that मेरे बिना मेरा बैग अहमदाबाद नहीं पहुंच सकता. Yes, my bags cannot reach Ahmedabad without me. I cannot reach Ahmedabad without my bags. Both of them have to happen together. That is why the degree of interrelationship is very, very high. And that is why, though they are different services, though they are separate services, they are not distinct in the context of the contract. They are not distinct in the context of the contract. Okay. We will not say dependable on each other. Dependable means it depends on each other. No, they are different. Yes. But in the context of the contract, it is understood. It is meant to be understood. It is meant to know that बंदे के साथ उसका लगेज भी जाएगा, पर्सन के साथ luggage जाएगा. Luggage will travel with the person, person will travel with the luggage. Both of them are not separate. The relationship is very high. So though the services are different, they are highly interrelated and hence they are not distinct in the context of the contract. If these criteria are met, then we can say that the goods or services are distinct in the context of the contract. The goods or services are distinct in the context of the contract. So now, ultimately, what do you mean by distinct goods or services or distinct performance obligations? First one, each such performance obligation or each such goods or services should result in additional benefits to the customers. This is the first part. This condition is generally satisfied. We are not going to look at this while recognizing the revenue. But the next one is all the negative conditions must be satisfied, which is first one, the goods or services should not be part of a single integration activity. The goods or services should not be a mere customization or modification of existing goods or services. The goods or services must not be of a nature which makes them highly interrelated. If these three negative conditions are satisfied, then the goods are said to be distinct in the context of the contract. Then the goods are said to be distinct in the context of the contract. Are we absolutely clear on this? Anybody has any slightest doubt also, please feel free to ask. Please feel free to ask. Okay? Even the slightest doubt, please feel free to ask. Okay? Mohammed, Ravish, Pooja, Sumit, Yedu, Vimal, Vanshika, Rajiv, Tanisha, Ashu, Krishna, Swati, Manan, Rajiv, Aditya. Yes? All clear? Absolutely clear? Yes? Okay, fine. So now we will solve related questions, okay, to identify whether the goods are distinct or not. We will do those related questions so that the concept is over once and for all. So when we come to step number 2, we need not visit this concept as such. And once that is done, we go back to step number 1. And in step number 1, we will see why this understanding was required. Okay. All right. Why this understanding was required. So now let us proceed. Illustration 10. A construction services company enters into a contract with a customer to build a water purification plant. The company is responsible for all aspects of the plant, including overall project management, engineering and design services, site preparation, physical construction of the plant, procurement of pumps and equipment for measuring and testing flow volumes and water quality, and integration of all components. Determine whether the company has a single or multiple performance obligations under the contract. Yes. For multiple performance obligations or distinct goods or services, what is the requirement? First one, each of the goods, service or performance obligation must benefit the customer. It does. Okay. It generally does. Take it from me. It generally does. Okay. So that part is always done. But then if I have to evaluate whether they are distinct in the context of the contract, I should meet the 3 negative conditions. It should not be customization or modification. It should not be highly interrelated. It should not be part of a single integration activity. In this case, tell me, I have project management 1, engineering and design services 2, site preparation 3, physical construction 4, procurement of pumps 5 and equipment, and integration of all the components 6. I have 6 activities which are being conducted. The 6th activity is essentially an integration of all the 5. Do you think the construction services company is going to bill me separately engineering services X, overall project management Y, procurement of pumps and equipment Z? Do you think you are going to get separate bills like this, or do you think you will get a single invoice stating that construction of water purification plant, that contract will be there wherein the price will be mentioned? What do you think will be done? Obviously, the second part. It is a simple water purification plant construction. Okay. And therefore, these are a single integration activity. This is a single integration activity. So how many performance obligations are there here? How many performance obligations? A single performance obligation. That's right. Everybody has given the right answer. So this is a single performance obligation. Vimal, did you follow? Mohammed, did you follow? Rajiv, Ravish, Vanshika, did you follow? Yes, ठीक है. मनन को तो समझा. Yes, Shankar, did you follow? Boys, Aditya, did you follow? Are you there? Okay. Viraj, did you follow? Sumit Jain, did you follow? Yes. All right. Very clear. Very simple. Okay. ऐसे questions exam में नहीं आएंगे. These questions will not come in the exam. Examination is a different ball game altogether. Okay. An entity. Okay. So we proceed further. An entity provides broadband services to its customers along with voice call service. So it provides broadband and voice call. Customer buys modem from the entity. However, customer can also get the connection from the entity and modem from any other vendor. The installation activity requires limited. We are coming to that, Sumit. See the next question. आपको समझ में आ जाएगा. Okay. However, customer can also get the connection from the entity and the modem from any other vendor. Installation activity requires limited effort. The cost involved is almost insignificant. It has various plans where it provides either broadband or voice call or both. Are the performance obligations under the contract distinct? Are the performance obligations under the contract distinct? Okay. I need your answers. Okay. Read it. Try to understand. Okay. See, sometimes contractor provides a running bill, Rajiv. The running bill is merely to collect the progress payments. Okay, it is merely to collect progress payments. वो bill raise नहीं करेगा, then what will be the basis for collecting the payments, है ना? So he raises a running bill, but raising a bill is not going to be the ground for revenue recognition. Come out of the mindset. Payment किया, revenue. Bill raise kiya, revenue. Come out of that. Revenue will be only in one case, when you fulfill the performance obligation. That's it. Nothing else. If you don't fulfill the performance obligation, bill is only a document. Bill is only a document. Okay. A running bill is a document to collect progressive payments. That's it. Apart from that, you are not going to get anything. They will raise a running bill for, okay, so let us assume in a real estate company, you get a notice, a demand letter. Sir, first slab is done, please pay 20%. Second slab is done, please pay another 20%. Painting and plumbing is going to start, please pay 30%. All these demand letters are nothing but kind of running bills. But what is that for? That is for the progress payments. That is for the progress payments. You are not paying for construction of a slab. You are paying for construction for the developed flat being given to you. And that is why, that is when you will book the revenue. That is when you will book the revenue. Okay. All right. Fine. Now, coming to the question, okay. So we have an internet service provider. We have a service provider which gives voice call also, broadband also. The voice call is normal. The broadband services, they give the optical fiber cable probably. All you have to do is fit in a modem. All you have to do is fit in a modem. And if you have to fit in the modem, is it highly interrelated? No. The company says, किसी भी कंपनी का मॉडेम उठा के डाल दो. You can put Siemens, you can put TP-Link, you can put D-Link. Whatever modem is available in the market, you can put that. So there is no requirement to put their own modem. Okay, there is no requirement to put in their own modem. So therefore, there is no high degree of interrelation. There is no high degree of interrelation. They are not a single integration activity. You can carry out yourself at a very insignificant cost, and therefore you are not regarding it as a single integration activity. They are not highly interrelated, and it is not customization or modification of existing contract. So therefore, are these obligations distinct in the context of the contract? Answer is yes. वैसे sir obligation है क्या? What is the obligation? The obligations are, first one is broadband services. Second one is voice call services. Third one is modem. The customer buys modem from the entity. That means modem is also an obligation that is being fulfilled. But sir, modem तो दूसरे का भी लगा सकते हो. But you felt that, ठीक है, why should I go hunting for a modem? I am getting the connection. Let me buy the modem from there only. So therefore, you have three performance obligations. You have three performance obligations in this regard. Yes. Now, is it distinct? Is it distinct? Answer is yes. Are you obligated to buy the modem? Answer is no. You can buy any third party's modem and do the fixing. Acha, are they highly interrelated? Answer is no. Is it a significant integration activity? Answer is no. Sir, आपको कैसे मालूम? See, the installation services requires limited effort and the cost involved is almost insignificant. That means what? It is something which does not require a high degree of specialization. कोई भी कर सकता है. See, if it were to be a single integration activity, then कोई भी कर सकता है. You would not be able to say that. You would not be able to say that. And therefore, are the performance obligations under the contract distinct? Answer is yes, they are. They are distinct. How many performance obligations? Three. Broadband, voice call and services. Broadband, voice call and modem. Okay, three distinct performance obligations. Performance obligations distinct in the context of the contract. Performance obligations distinct in the context of the contract. Are we clear with this? Yes. Are we clear? Yes. Three performance obligations. Three performance obligations. Okay. All right. Now, next one. How many are there? Many are there. Okay. All right. Okay. Okay, fine. What I am going to do is, I'll be leaving this for homework. Okay. Illustration 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. Okay. Can you do these questions for homework? These illustrations? Yes. Can you do these? All of them are on similar grounds. All the questions are asking, determine how many performance obligations does the entity have. So I want you to do all these questions by yourself. It's not a great deal. It's manageable. You know the concept. You just have to apply that concept to these examples. Can you try these questions 12 to 21? Yes. Everyone? Shankar? Vanshika? Vimal? Ravish? Will you do these questions and come? Yes. Deepak? Aditya? Ashu? Can you try these questions? Okay, good. So try it out. Okay, don't come and say in the next class that we did not try. Okay, I will be happy to solve questions where you have doubts. But see, it's 10 questions, 12 to 21, and all of it is theory. What I will do is I will read it. I will give you the answer. I will give you the reasoning, but they are on similar grounds. So the important part that you have to remember is this. Okay, this. So just take a screenshot of this particular slide, and that will be the ground for doing the doing those 10 questions which I have just now marked for you. Okay, which I have just now marked for you. Okay, all right, done. Taken the screenshot. Okay, now I just have to explain you one more thing, and that will give you clarity. It's related to this question. You will understand what it is. Okay, now we have studied distinct goods and services in the context of the contract. We are now studying a modification of that, transfer of series of distinct goods or services that are substantially the same and have same pattern of transfer Okay, all right, now let us start. Okay, we discussed this with an example. Netflix or Sony or Prime Video. Okay, all of them, what do? They basically provide you with streaming services. Now, when I say streaming services, what do you think? Is it one single service over the tenure of the contract, or is it multiple streaming services over the tenure of the contract? What do you think it is? You subscribe to Netflix for 649 rupees for 1 month. Now, is Netflix, think and answer, sir, सोच के जवाब दो. is Netflix streaming for a period of, is the Netflix company giving a streaming service for 1 month, or is Netflix streaming it every day, every minute, every second, every hour, and the entire month's streaming service is nothing but multiple streaming services that are provided on a day-to-day, hour-to-hour, minute-to-minute, second-to-second basis to you as the customer. What do you think? By multiple streaming services, I do not mean multiple channels. I do not mean multiple channels. I just mean that is the streaming activity a single activity for the 30-day period, or is it multiple streaming services provided for each week, each day, each hour, each minute, each second, and you can watch it at any point of time? What is the nature of the streaming services? It is multiple. It is multiple. एक मिनट के लिए भी मत सोचो कि वो single streaming service है. No, it's not. Netflix is giving multiple streaming services over the entire tenure of 1 month. It's possible that in entire 1 month you watch only one series. Doesn't matter. एक कौन सा भी web series you watch only one web series during the entire month. But what Netflix does, Netflix gives you all the options on all the days at all time. And therefore, it's not a single streaming service. It's a combination of multiple streaming services combined together as one single streaming service on one single streaming platform. Are we able to understand this? Yes. The fact is, we are not able to view it as such. हमारी नजर, our perspective, हमारा दृष्टिकोण, our perspective is not permitting us to see it as multiple streaming services. But essentially, it is like saying a drop by drop makes an ocean. That's what one of the saying goes. So basically, multiple streamings together over a tenure of 1 month make it a single streaming service at the end of the month. Is it okay? Yes. So basically what happens is, on day 1, what you are getting streamed is the same on day 2, is the same on day 3, is the same on day 4, is the same on day 29, is the same on day 30, is the same on day 31. So what is happening is, I am transferring distinct goods and services. I am transferring distinct goods and services in a series fashion, not at one time. Streaming ऐसा नहीं होता है that first day of the month मैंने stream कर दिया, I streamed it today and then I stop the streaming for next 1 month and tell the customer, अभी मैंने stream किया, whatever you want to see, download it, watch it for the month, next month I am again going to stream. That's not what you are going to do. What you are doing is, you are giving a continuous inflow of content. You are giving a continuous inflow of content, a continuous access to content. You are giving a continuous access to content. Again, monthly billing done by Netflix has nothing to do with revenue recognition. आप billing, payment से बाहर आओ. Come out of billing, come out of payment. That is not the way to deal with your revenue recognition. Billing का revenue के साथ कोई संबंध नहीं है. There is no relationship between invoicing and revenue recognition. There is no relationship between that. Okay. Please understand that monthly billing is only a manner of collecting the money. That's it. You have an Airtel phone connection. This Airtel phone connection, today you have the connection being given to you. Tomorrow you have day after you have. So is it continuous provision of services over the entire month? Answer is yes. What I am doing is I am giving the services on day 1, the same services I am giving on day 2, the same I am giving on day 3, the same I give on day 30 and day 31. That means in the entire 31-day period, I am giving the same servicing. I am giving the same services. So what I am doing is the services which I am rendering on day 1 is different from the services, is distinct from the services I am rendering on day 2. Let me explain. Okay. Suppose Netflix. Okay. Day 1. You watch some show X. Day 2. You watch some movie Y. Day 3. You watch another show Z. Now, is Netflix giving you the streaming services on day 1, day 2, day 3? Answer is yes. Understand carefully. Now, is the service rendered on day 2 distinct from what was rendered on day 1? Answer is yes. Is the service rendered on day 3 distinct from what was rendered on day 2? Answer is yes. But what is happening is it is basically the same service which is being given over the tenure. It is like saying 20 kg basmati rice given on day 1, 20 kg basmati rice on day 2, 20 kg basmati rice on day 3, 20 kg on day 31. That means distinct goods and or services are given on each of the days. But apne ko dikhta nahi hai because the services are the same. And therefore, this is a promise to give the same services in a series fashion. Are we clear with this? Yes. Aapka phone connection, aapka internet connection, your streaming services, your gas pipeline services, all of them are giving the same service. On each of the days. That means the services are performed. Performance obligations are rendered on each of the days. And they are the same performance obligations. But the performance obligation rendered on day 2 is distinct from what was rendered on day 1. I am not saying it is different. It is distinct. The performance obligation is same in terms of what is rendered, but it is distinct in terms of what was rendered on the previous day. Therefore, in all these cases, what happens is, since the services rendered are only of one single type, one single category, one single nature, therefore, it will be regarded as a single performance obligation. Have we understood this? Everyone, have we understood this? Please tell me, have we understood this? Otherwise, you will end up getting confused with this. Okay, bologe sir ne padhaya nahi tha. Okay, is it understood? The services on day 1 is the same as day 2, is the same as on day 30, and therefore it will be regarded as a single performance obligation. It is regarded as a single performance obligation that is satisfied over a period of time. Okay. It is satisfied over a month, because this is where your monthly billing comes into picture. The monthly billing is a mere manner of collecting the revenue. Because you see, I have to put in artificial hurdles in between. I have to put in artificial hurdles in between. नहीं तो Netflix को पैसा कब मिलेगा? When is Netflix going to get the revenue? Netflix सर रेवेन्यू तो सर्विस प्रोविजन खत्म होने के बाद मिलेगा. सर वी विल रिकॉग्नाइज द रेवेन्यू आफ्टर द प्रोविजन ऑफ सर्विसेज गेट्स ओवर. But that is the question, no? When will the obligation get over, sir? Yours is a continuous obligation. The continuous obligation gets over only in two cases: when customer terminates or vendor terminates. Customer terminates, so it may go on indefinitely. So if it goes on indefinitely, then at that point of time, how are you going to recognize the revenue? भाई कुछ तो basis चाहिए ना. So therefore you have put these artificial periods in between. At the end of every month, billing will be raised. At the end of every month, billing will be raised. Every quarter, billing will be raised. Whatever be the mechanism. So at each of those, at each of those period milestones, you will start to recognize the revenue. It is a milestone that is put in terms of time period only because you have to recognize the revenue at some or the other point of time. You cannot indefinitely postpone it because one is the pattern of transfer is the same. The pattern of transfer is the same. And secondly, the services are being consumed as and when they are being provided. So Airtel provides you call services. You are making the call and consuming those call services at the same time. So it happens and gets consumed at the same time, and therefore you introduce these artificial milestones in between. Is it understood? Yes. Have you understood this? So therefore we do a monthly billing, book the revenue and realize the payment. Okay, book the revenue and realize the payment. So since the services are the same, it will be regarded as a single performance obligation. It will be regarded as a single performance obligation. Have you understood? Yes? Sure. मैन पावर सप्लाई सर्विसेज. यू गिव मैन पावर. आज जो दोगे वही सर्विस कल भी दोगे, वही सर्विस लास्ट डे भी दोगे. यू आर गिविंग द सेम सर्विसेज एंड देयरफॉर it will be regarded as revenue at the end. Okay, so I hope everybody has understood this, and I hope everybody tries to solve those questions which I have requested them to solve. So we take a short break now of 5 minutes. We take a break of 5 minutes and then we shall come to where we started. Why had we started this? We had started this to pick up contract modifications, right? So we now continue with contract modifications after the break. So meet after 5 minutes. It's 8:47. We shall meet at 8 hours, 8:55. We shall meet at 8:55. Okay. Take a short break. See you at 8:55. Okay. All right. All right. Welcome back, guys. So I hope what we discussed in the first session has been of significance to you. Are you guys able to understand? Yes. So distinct goods and or services, distinct in the context of the contract. So we have discussed that. And now we come back to where we actually had dropped off. Okay. We were discussing contract modifications. Just a second. Yeah. We were discussing contract modifications. Okay. So what do we mean by contract modifications? That is what we are now going to see. Okay. So now, what do you understand by the term contract modification? There could be two cases. The first scenario is the contract modification results in a separate contract by itself. The contract modification results into a separate contract by itself. Okay. That means what? The scope of the work promised increases, adds new promised goods or services that are considered distinct. That is why I had to do the term distinct goods and services in advance, because now you will not have any difficulty in understanding what is the meaning of goods or services which are distinct in the context of the contract. So scope increases by adding new goods or services, and thereafter what is given is the increase in the contract price reflects the standalone selling price of the additional goods or services. The increase reflects the standalone selling price of the goods or services. Now, what does this mean? This means that the fresh order which you get, the fresh contract which is prepared, the fresh contract which is identified has an increased selling price which reflects the standalone selling price. Acha. Now many students again get confused here. What many students will think is, you remember that Taj example? Yes, 100 kgs of basmati rice. Suppose it was originally contracted at 100 rupees per kg. Okay. Suppose it was originally put at 100 rupees per kg. So 100 into 100 gives you 10,000 rupees. 100 into 100 gives you 10,000 rupees. Now Taj asked for an additional 20 kgs. So let us take that this is the new contract. This is not the existing contract. This is a fresh contract. And under this fresh contract, 20 kg basmati rice was billed at 90 rupees. So 20 into 9 comes to 1800. Now many of the students will say that, sir, this 90 rupees does not reflect the standalone selling price, because initially तो हमने 100 में बेचा था. We had sold it at 100. Now we are selling at 90. It does not reflect the standalone selling price. No, that is not the understanding. When I say standalone selling price, I don't mean that it should be equal to all the goods sold in that particular contract or in and around that particular time frame. Not necessary. See, I sold 100 kgs the first time. The next time it turns out to be a bulk order now, and therefore what happens is I could be possibly achieving economies of scale by placing an order with the same customer. I save on advertising and distribution costs. I save on marketing and promotional activities. So those savings is able to translate into a reduced selling price for the customer. I am essentially passing on those benefits to the customer. A reduced profit margin for me is okay, because I am getting bulk orders now, and therefore I am in a position to achieve economies of scale. So standalone selling price will not necessarily mean that the two rates will always end up being the same. Answer is no. It should just reflect the standalone selling price of the additional goods or services. Okay, that's it. So since this is a separate contract with these two conditions satisfied, we will account for the modification as a separate contract. That means the 20 kg contract which we are going to give, that 20 kg we will treat it as a separate contract and bill it at 90 rupees per kg. Bill it at 90 rupees per kg. Why do I do this? Why do I take it as a separate contract? There is no economic difference by entering into a separate contract or modifying an existing contract, number one. Number two, an entity is allowed to adjust the standalone selling price for costs that it does not incur because it is contracting with a repeat customer. By repeat customer के साथ आप negotiate करोगे, then you will be comfortable about the payment terms. You will be comfortable about the what you can say. You will be comfortable with the fact that you don't have to spend on advertising, business promotion, publicity, etc. You will be comfortable with the fact that you know what the customer exactly wants, so you can provide that. Okay, there won't be any charges on account of sending samples, getting their confirmation and then sending, because you have their quality requirements. Okay, so all these things will result in some cost savings for you, which you can pass on to the customer in the form of reduced selling prices. Therefore, if the standalone price is say rupees 10, a modification that adds 9.5 might reflect the standalone selling price of the additional unit. Example, selling effort, admin costs, etc. might be much lower when incremental units are added. So therefore, you don't necessarily end up ensuring that it is the same rate. Rates can change. Okay. So ये तो हो गया modifications constituting separate contracts. Okay. So let us come up to this question. An entity promises to sell 120 products to a customer for 1,20,000 rupees, and this amounts to rupees 1,000 per product. The products are transferred to the customer over a 6-year period. The entity transfers control, okay, of each product at a point in time. We'll study this in great detail later. At a point in time means from today, you are going to control this particular, what you can say, this particular product. Okay, so from a particular point in time. So what is the significance of revenue recognized at a point in time? Revenue recognized over a period of time. What is the guidance? We will see that in the next couple of sessions. Okay. After the entity has transferred control of 60 products, the contract is modified to require delivery of an additional 30 products to the customer at a price of 950 per product, which is the standalone selling price for such additional products at the time of placing this order. Additional 30 products were not included in the initial contract. So this is a separate contract. It is assumed that additional products are contracted for a price that reflects the standalone selling price. Determine the accounting for the modified contract. Okay. So what did I have first? See, 60 products at rupees 1,000. So this is rupees 60,000. This is already transferred. This is already transferred. The remaining 60 products again at rupees 1,000, not yet transferred. Okay, so this is still pending for sale. Okay, this is still pending for sale. And then you have 30 products that came in at rupees 950. That came in at rupees 950. The question that they are asking is, determine the accounting for the modified contract. So what will be done? This revenue is already recognized, the first one. Second one, you will recognize the revenue when it is sold. And third one is 30 into 950, you will book it at 28,600. 28,500. You will book it at 28,500. Are we able to understand? Yes. Is 950 reflective of the standalone selling prices? They have given that in the question. Even if it's not given, you will have to assume unless some other fact is given in the question. Is it understood? Yes. Are we clear with this? Are we clear? Boys and girls, are we clear? Yes, Pooja, Tanisha, Ravish. Vanshika, all clear? Yes. Okay, Yedo has confirmed, Ashu has confirmed. Okay, everybody confirmed. Fine. Okay, so that takes care of modifications constituting a separate contract. Now the question is, suppose modifications do not constitute a separate contract. Suppose modifications do not constitute separate contracts, then first treatment. In the case of this type of modification, accounting treatment 1. Account for modification prospectively, henceforth, as long as goods or services to be provided after the modification are distinct from the goods or services that were already provided to the customer. Distinct. Okay, fine. You want me to explain the example once again? So let us quickly look. So the first contract was for 120 products. Okay, Shankar, the first contract was for 120 products. Out of 120, 60 products, it's already sold, transferred. Remaining 60 is pending to be transferred. That revenue also will be recognized at 1,000 rupees because that is the contracted price. Then when this contract was being performed at this point, at this time, okay, in between these two contracts, you got an additional contract for 30 products. You got an additional contract for 30 products. Now 30 products, you got the contract at rupees 950. So that gives you 330 into 950. That should give you 28,500. Let me just check. 30 into 950. Yeah. So now the question is, how do you do the accounting of this contract? How do you do this accounting of this 30 products? Okay. So that is quite simple. The remaining 60 you sell at 1,000 and the remaining 30, the fresh order, you will sell at 950 rupees. You will sell at 950. 950 is different from 1,000, huh? Yes, definitely. Because you don't have to advertise, you don't have to incur any selling, distribution, promotion expenses, you don't have to incur any entertainment expenses, etc. And therefore, you can afford to reduce your selling price. And 950 is a reflection of what is the market, of what is the standalone selling price. And therefore, these 30 products revenue will be recognized at 950. Obviously, the revenue will be recognized only when the products are sold. Only when the products are sold. Right now, I cannot recognize. Right now, I cannot recognize. Is it okay? Have you understood, Shankar? Yes? Okay. So now coming to the next one. Accounting treatment 1. That means you can account for the contract prospectively as long as goods or services to be provided after modification is distinct from the goods or services provided prior to the modification. So therefore, you are going to do only a prospective accounting. You are going to do only a prospective accounting. And when is this prospective accounting permitted? Provided the goods or services to be provided are distinct from what is already provided. The goods or services to be provided is distinct from what is already provided to the customer. Okay. Distinct means what? What we have already studied from step number 2. The customer should be benefited from the additional goods or services or performance obligation discharged by the supplier. And second one, the goods, services or performance obligations are said to be distinct if it meets those three negative conditions. The first one is they should not be part of a single integration activity. They should not be customization or modification, and they should not be highly interrelated. If these three negative conditions are fulfilled, then we can say that the goods are distinct in the context of the contract. The services and the performance obligations are distinct in the context of the contract. So those distinct goods and services की बात हो रही है यहाँ पे. If what you are supplying now is going to be distinct from what is already supplied, that means it will be given a prospective treatment henceforth. If it is distinct in the context of the contract, then that is the case, then you will do the accounting for the modification prospectively. Henceforth, आगे चल के क्या recognize होगा, that is what you are going to do. The logic behind this accounting is that accounting for these types of modifications, okay, this paragraph, don't read it right now. We will read it after we do accounting treatment 2. After we do accounting treatment 2. When the remaining goods or services are not distinct and are part of a single performance obligation that is partially satisfied, the entity recognizes the effect of the modification on a cumulative catch-up basis. Okay. So if goods or services are distinct, do the accounting prospectively. If goods or services are not distinct, you do a cumulative catch-up adjustment. Cumulative catch-up adjustment means what? You take the total revenue already recognized till now, and then you take the total revenue from inception up till the date of modification. That total revenue minus what was recognized earlier will become the revenue to be recognized in the current year. Will be the revenue to be recognized in the current year. Are we clear with this? Yes. Are we clear with this? That means accounting treatment 3 will be a combination of 1 and 2 above. Okay. So we will try to understand this with the help of an example what the institute has given. I think that's the easiest way we can understand going forward. Okay. Now okay. On 1st April 20X1, KLC enters into a contract with Mr. K to provide a machine for 2.5 million, 1 year of maintenance services for 55,000 per month, and on 1st October 20X1, KLC and Mr. K agreed to modify the contract to reduce the services from 55 to 45,000 per month. Determine the effect of change in the contract. So this is what you have to do. So now let us understand with the help of a timeline. Okay. Okay, we have this timeline. Okay. So 1st April 20X1. You are entering into a contract with Mr. K. What are you going to provide on this day? You will provide a machine for rupees 2.5 million. Okay. On this day, you have agreed to provide maintenance services at 55,000 per month. At 55,000 per month. And this tenure is for a period of 1 year. So this is what you have agreed. From 1st October, they agreed to modify the coverage of the services and reduce it to 45,000 per month. So this is 6 months past. So from 1st October 20X1, this will be 45,000 per month. This will be 45,000 per month for the remaining 6 months. Okay. Are you clear with the question? Everyone, have you understood the question? Yes. Any doubts? 1st April, machine came. Along with the machine, maintenance at 55,000. You saw for 6 months, and from the 7th month beginning, you said that we will do the modification in the contract, and henceforth it will be rupees 45,000 per month. It will be rupees 45,000 per month. So now the question is, how am I going to account for the 45,000? I have to discuss accounting of this. I have to discuss accounting of this. Is it clear what the question is asking? Yes. Is it clear what the question is asking? Yes. All right. Now, what I want you to answer. The services provided in this 6-month period, the services provided in this 6-month period, are they distinct from the services that are provided in the prior 6 months? Are they distinct from the services in the prior 6 months? Answer the questions. Distinct. So provision of additional goods or services will give benefit to the customer. So these 6 months at 45,000 per month, is it going to give additional benefit to the customer? Answer is yes. Then you look at the second question where those 3 negative conditions need to be fulfilled. Are these services highly interrelated? Answer is no. They are not highly interrelated with what has already been provided. That is why they are able to provide separately. Second one, are these services customization or modification? Answer is no, they are not. And then the third one is, the third question that you are going to ask is, are these services a part of a single integration activity? Answer is no, it's not. It is regular maintenance services. It's not part of a single integration activity. So therefore, are these goods, are these services distinct in the context of the contract? Answer is yes. And if these goods are distinct in the context of the contract, that means what? That means we will have to regard them as distinct and account for it based on the standalone selling prices. Do I have the standalone selling prices? Answer is yes, I have the standalone selling price. What is the standalone selling price? 45,000. Will I have to make an adjustment against the revenue already recognized? Answer is no. And therefore, these 45,000, since they are distinct, we will account for it prospectively. We will account for it prospectively. Are we clear with this? Yes. So you will account for it on a prospective basis. You will account for it on a prospective basis and do the accounting. Are we clear? Yes. They are distinct services, beta, not goods. Okay. Yes. Yadu, is it clear? Pooja, is it clear? Ashu, Mohammed, Panchika, Sumit Jain, Vimal, Shankar, Mohammed, is it clear? Rajiv, Deepak, Shruti, Krishna Swati, all clear? Yes. Okay, fine. Okay, ठीक है, चलो. Everybody is clear, so that does illustration 8 for you. Now coming to illustration 9. Okay. All right. Okay. Last illustration for the day. and then we summarize the step number 1. So with that step number 1, we come to a formal closure. Okay. Now, I just rub this off. I hope you have noted it down. Okay. Growth Limited enters into an arrangement with a customer for infrastructure outsourcing deal. Based on its experience, Growth Limited determines that customizing the infrastructure will take approximately 200 hours in total to complete the project and charges rupees 150 per hour. After incurring 100 hours of time, Growth Limited and the customer agree to change an aspect of the project and increases the estimate of labor hours by 50 hours at the rate of 100 per hour. Determine how the contract modification will be accounted as per Ind AS 115. As per Ind AS 115. Okay. Now, see. Initially, what did we propose? Initial contract 200 into 150. So this is 30,000. Okay. Initially, you have proposed this rate. Okay. Now, after incurring 100 hours of time, Growth Limited and the customer agree to change an aspect of the project and charges and increases estimate of hours by 50 hours. Okay, at the rate of 100 rupees per hour. At the rate of 100 rupees per hour. Okay, so this is what is going to be understood. So let us understand this with an example. Let us understand this with an example. Okay. So suppose Growth Limited is a CA firm. Growth Limited is a CA firm and it is providing outsourcing services. It is providing outsourced services to corporate clients. Okay. So these outsourced services which it is providing, it is relating to direct tax compliances. It is relating to direct tax compliances. So what the CA firm has to do is, it has to file the TDS returns. It has to get the tax audit prepared. It has to ensure that Form 3CA, 3CD are done. So all these requirements, it has to file Form 15CB, Form 15CA, everything, all direct tax compliances have to be handled by Growth Limited. Now, Growth Limited took an overall assessment of what all activities are there, and what happened is ultimately it touches 200 hours at rupees 150 per hour. At rupees 150 per hour. So that comes to your estimate of 30,000 rupees for the year. 30,000 rupees for the year. Now, let us move on to the next aspect. During the course of provision of income tax outsourced services, the CA firm came to know that this entity has a lot of specified domestic transactions as laid in section 92CA or something like that. Okay, there is a lot of specified domestic transactions, and because there is a lot of specified domestic transactions, what happens is these specified domestic transactions gives rise to transfer pricing. It gives rise to the applicability of transfer pricing to the company, and because transfer pricing is applicable to the company, the CA firm should now engage in preparing Form 3CEB also for the company, should now arrange in preparing Form 3CEB in coordinating with the transfer pricing auditors, prepare a TP study. All that needs to be done by the CA firm. Now this CA firm said that, look, your requirement has increased, so our contract has to be modified. Now our contract has to be modified means you cannot have just 200 into 150. I will have to increase the number of billable hours. Okay. So how much are you going to increase? So then the CA firm said, look, for the transfer pricing study, TP report, all of that, you will get additional 50 hours from our side. We will be billing additional 50 hours from our side, and the cost of that is going to be 50 into 100. So that comes to rupees 50 into 100. That comes to rupees 5,000. So this is what is the fresh contract. This is what is the fresh computation based on the new what you can say, on the new requirements. So therefore, now what is the position is, initially I had billed 200 at 150, and now we are having 50 at rupees 100, 50 at rupees 100. So totally I am having 250 hours, and the cost of that is rupees 35,000. The cost of that is rupees 35,000. So therefore, what will be my revised rate? What will be my revised rate? My revised rate will be 140 per hour. Will be 140 per hour. Now, is this additional form 3CEB a distinct goods or services, or is it not distinct? The original goods and services, the contract for which you have entered into, is compliances under direct tax laws. So therefore, you tell me whether we would what you can say, whether our extra 50 hours is distinct in the context of the contract, or it is not distinct in the context of the contract. Okay, what do you think? What do you think? Yes, what do you think? Come on, tell me. The additional 50 hours, is it your contract is IT compliances? Your contract is IT compliances for the company. So now the question is it distinct? Answer is no. You were doing direct tax compliance before also. Now also you are doing direct tax compliance only. Usme what is the big deal? Yes or no? Now also you are doing income tax service only. So that form 3CEB which you are filling is not distinct in the context of the contract, because that is something which is what you have already provided. That is something which you have already provided. Form alag hai. Form is different, but I'm not concerned with the form. Form is just a compliance number that you have to fulfill. But the substratum is, when 200 hours were allotted, that point of time you had suggested use it for this thing. You had suggested that to use it for direct tax compliances. That time you did not know form 3CB is not applicable. But now when you know, that also comes under the broad umbrella of income tax outsourced services, and therefore service provided before also the same, service provided now also is exactly the same, and therefore we are going to treat it as a supply which is not distinct, as a supply which is not distinct. Is it clear, everyone? Is it clear? Yes. If contract is extended for direct and indirect tax compliance, then indirect tax compliance is distinct in the context of the contract, because that is a different source altogether. That is a different set of compliances altogether. But suppose I again extend it, since you have picked up GST compliance. You are outsourced for doing GST filing. So you do GSTR 1, GSTR 2, 2A, 2B reconciliations, GSTR 3B, all that you do. Now, suppose you at the time of entering into contract, you felt that turnover would not have crossed, and therefore you do not have turnover would not have crossed 5 crores, and therefore 9C requirement was not there. But during the course of the year, you notice it's crossing 5 crores, and therefore 9C project, GSTR 9C needs to be filed. So now the question is, who is going to do that? And if that needs to be done, then will it be regarded as what you can say? Will it be regarded as service distinct in the context of the contract? Answer is no, because all that you are doing is GST compliance services. The scope has increased because the government has increased the form. So therefore, you are going to ultimately record it as a non-distinct supply. Is it okay? Yes. So now you have 250 hours for which you have billed 35,000. So that comes to rupees. Okay. Okay, 140 per hour. 140 per hour. Now let us try to understand. The impact. Let us now try to understand the impact. Revenue recognized. What is my revenue that is getting recognized? What is the revenue that is getting recognized? Okay, so that is going to be 200 जो आपने प्रोवाइड किया है into 150, not 200. क्या लिखा है? After incurring 100 hours. So 100 into 150. So that gives you 15,000. This is the revenue which you have already booked. But by virtue of the modification, will I now be able to record it prospectively? Answer is no. You cannot. You have to take it as a catch-up adjustment. Why? Because what you are providing is not distinct from what has already been provided. And because it is not distinct, we are going to recognize it. As a cumulative catch-up adjustment. So cumulative catch-up adjustment का मतलब क्या होता है? What do you mean by cumulative catch-up adjustment? Cumulative catch-up adjustment means revenue to be recognized is equal to sir, I have done work for 100 hours, but the hourly rate is 140. So ideally, my revenue should have been only 14,000. Okay, so therefore, you have recognized 15, but revenue should be recognized 14. So what is this 1,000? Revenue to be reversed. Okay. Revenue to be reversed. Are we clear with this? Yes, you will be reversing revenue to the extent of 1,000 rupees because you have booked the revenue at 15,000 when in fact it had to be booked at 48,000. Did everybody understand this? Yes. वेरी क्लियर. इसको हम लोग बोलते हैं क्यूम्युलेटिव कैच अप एडजस्टमेंट. आई कॉट अप विथ माई रेट and I do the retrospective adjustment. I do the retrospective adjustment. The retrospective adjustment. Are we able to follow? Yes. Are we able to follow? Ravish has confirmed. What about Pooja? Got it? Tanisha got it? Yes. Vimal, Vanshika, did you follow? Sumit Jain, did you follow? Yadu, did you follow? Yes. Munish Kumar Gupta, you said no. No means what? No doubts or did not follow? Panchika has confirmed. Yadu, Pooja, Ashu, Shankar. Okay. So all of you have confirmed. So that means you have understood this. So now contract modification summary. Are the following true? Scope of the contract increases because of distinct goods or services getting added, number one. Second, consideration increases by standalone selling price of the added goods or services. If yes, account for the modification as a separate contract. Okay. Now, if no, are the remaining goods or services distinct from the goods or services transferred prior to modification? Answer is yes. Then you treat the contract as a termination of old and creation of a new contract. If that is also no, then are the remaining goods or services not distinct and therefore form part of a single performance obligation that is partially satisfied? If yes, account for the contract modification on a cumulative catch-up adjustment basis. Are some of the remaining goods distinct, others not distinct? Then you will have to find a way to split between the distinct and non-distinct elements. Okay, so that takes care of summary. And then the nature of modification, I have just put it as a flow chart. Okay, so that concludes step number 1. Let me see any question. Okay. Comparing illustration 8 with 9. Okay. How is it that in illustration 9, it is resulting in a modification, whereas in, okay, see, illustration 8, look at the words, First 6 months, you are providing at 55,000. Correct? Next 6 months, you have modified to make it 45,000. So is it a modification or not? Okay. Shruti, think about this. Is it not a modification? Because that's what they have said. Mr. KLC Limited and Mr. K agree to modify the contract to reduce the amount of services from 55,000 to rupees 45,000. So they are modifying the contract, and therefore this modification is going to be recognized as such, is going to be considered as such. Okay, so have you understood this, Shruti? Okay, now next one. Why do we account for prospectively in illustration 8 but retrospectively in illustration 9? Illustration 8, what is provided here in this, what you can say, what is provided after 6 months does not have any relationship with what is already provided. Does not have any relationship with what is already, does not have any, what you can say, relationship with what has already been provided. The services provided in the last 6 months are quite different from what is provided in the first 6 months. Is it okay? Yes, it's quite different, and therefore we account for it prospectively. Whereas in the second case, what has happened is, I am providing income tax provision services, income tax outsourced services. And because I am providing income tax outsourced services, there is an increase in the scope of that because of a new form getting applicable. And because of a new form getting applicable, what we can do is we will have to increase the time spent. But ultimately what you are doing is you are providing the same income tax outsourced services. Only thing is it is provided for the entire period as such under the umbrella of outsourced services. The services are not categorized into TDS return this much, Form 3CA 3CD this much, Form 15 CACB this much, Form 3 CEB this much. That is not the kind of contract. The contract is a single retainership contract saying that these are the forms, this is what you have to look at, you have to be responsible for the outsourcing. So therefore you get the work done from them. So that is now getting added. The Form 3 CEB is getting added to that. And therefore, what is going to happen is you are now going to recognize that. You are now going to recognize that as a cumulative catch-up adjustment. Okay. Okay. Sir, what if, see, modification is there. Modification is there. But the modification in this tenure means that some goods or services are being provided in this tenure. The goods and or services or performance obligations provided in this tenure is distinct from what is already provided, is distinct. That is why they are saying henceforth you do the billing at 45,000. Henceforth you do the billing at 45,000. And that is why the modification implies that the supply of goods, services or fulfillment of performance obligation is distinct in the context of the contract. Answer those three questions which I was always telling you to answer. First one, provision of services for the 6 months benefits the customers. Answer is yes. So first one. Second one is it a highly integration? Is it part of a single integration activity? Answer is no. Next one, is it customization or modification only? Answer to that also is no. And last one is are the services being provided highly interrelated? That answer also is no. So it automatically becomes distinct. And what you are now providing has no bearing to what has already been provided. And that is why this modification becomes distinct in the context of the contract. Are you clear, Shruti? Yes. Munish, आपका doubt ठीक हो गया? Yes. Why do we account prospectively in 9? Why do we account for the modification retrospectively in illustration 9 versus why do we do it prospectively in illustration 8? Have you understood this? Yes. Have you understood this? Yes. Have you understood, everyone? Okay. All right. Fine. So that takes care of illustration 8 and 9. So this is the summary. This is yet another summary. So with that, we close the step number 1 today and part. Shruti, are you convinced? Shruti, are you convinced? Munish Kumar Gupta, aapko samjha? Yes, both of you. Did you understand? Yes. Sure. Let me know if you have understood, guys. Okay. All right. ठीक है. Shruti, did you follow? Okay. So step number 1 is done. Step number 2, 50% is complete with the distinct goods and services. So with that, we end today's session. We will continue our discussion on Saturday. Saturday we'll have a long session. Saturday as well as Sunday will have fairly long sessions, so that I can complete step number 3, 4, and try to complete step number 5 towards the end. Okay. So we should be in a position to complete the standard at any cost by Tuesday, by the coming Tuesday. Okay. So that's it for today. See you guys on Saturday. Okay. See you guys on Saturday. Take care. Revise. Step number 1, revise. Step number 2, distinct goods and services, revise. Step number 2, do those 10 questions, illustration 12 to illustration 21. And then you come on Saturday. Saturday will be a very interesting session. Okay. All right. So that's it for today. If there is anything that that you have not understood, you can just leave a message. I can look after that. Okay. So thank you everyone. We close the session for today. Okay. All right. Yes, session हो गया. Okay.